What's up, fam? I am crazy excited right now to talk about what I've been working on for the previous 3 years. This is something I was talking to my friends in the financial industry, my family members that work in the financial industry since 2018. Also, as most of you know, we've talked about on Twitter, I myself have worked on Wall Street for basically 11 years. The first 6 were for a broker, currency, FX liquidity aggregator. For the most recent 5, I worked in the fintech space, selling investment management and risk management software to both the buy and sell side, all Wall Street firms, hedge funds, asset managers, insurance firms, banks, exchanges, brokers, etc. And this is across all asset classes, so equities, commodities, fixed income, and FX. Like I just mentioned, and understanding and using derivative products underneath each. I didn't know exactly how they were going to get us there when talks of the central bank-backed digital currency was going to be implemented. But now that we're closer and it's much easier to put the pieces of the puzzle together, I have my complete macroeconomic chart for you to not only show you where we're going as an economy for the next 2 years, leading into the election, but also just in general where a lot of stocks are going to be going. I don't really think that enough of people understand what's about to happen with the central bank digital currency coming into play, but it is basically a play to make sure that you have absolutely no control over the monetary supply or system whatsoever, and everything is recorded. But the act of getting us there is what's so important, because they can't just enact it overnight. There has to be some type of crisis that happens, so they destroy the United States dollar's purchasing power by inflating it to a level that is completely unsustainable. And with this comes unsustainable yields. Now, I know you guys have seen the Treasury 10-year jump to 5 and 6%. Just give it till 2025, fall, winter, when Treasury yields on the 10-year are 22%, and mortgage rates are 20%. You guys think things are bad now? You have no idea. You have no idea what's coming. It's going to be worse than when Volcker had to raise interest rates 21.5% in 1981 to stop the stagflation of the 1970s. So we're in for a very, very serious life-changing event here. Now, there's only, really one way to get there, and that's by injecting too much money into the economy. But like I just said, there has to be some type of crisis that allows them to change the rules of the game. And enter COVID, which is our first step on the road to hyperinflation. Remember, the place that they want, the middle and lower class to consistently be, because they can't replicate human horsepower, is in debt. The more you're in debt, the more you are completely concentrated and reliant on your government to survive. Because that's the name of the game, and we've seen it with every crisis that has happened in the last 100 years. We can go back. I'm gonna touch on all that back to 1907 as well during the documentary. But it's scary stuff, and it's something that if you don't really understand a lot about this, it can be very confusing. I'm gonna break it down in layman's terms as best as I can. And I also want you to understand where the blue chips, the meme stocks, there's a large sector rotation that we are currently about to experience, and this is big. This is my macroeconomic projection for the next 2 years. The next 2 years will change the course of history over the next 100. And the next 2 years also lead us into the election. And I want to also talk about what happens after the election, leading into basically mid-2027, maybe early 2028-ish. This is going to be the only time I post or talk about this, basically until we're probably at the top of the market. Remember to follow me on Twitter. That's where I give the most consistent updates from these standpoints for all stocks covered, as well as the bond market. But give me a little bit. I'm nearly done with it. I've gotten so close. I also changed the camera angle, so now I can spin around and actually do fun stuff in the apartment. All right, I'll talk to you guys soon. All right, let's jump into it. So I want to say that this documentary is going to be a multi-part. I want to say probably somewhere around 8 to 10 parts, each part being anywhere from 5 minutes to 15 to 25 minutes, something like that. In total, probably around an hour and a half. I'm going to keep it as efficient as humanly possible, but there is so much detail and so much to talk about, going from COVID to where we're about to end up all the way out to 2028. And we are going to be covering, not just the macroeconomics, but also the technical analysis. I'm going to be talking about the options chain. I'm going to be talking about things going on with the Fed, QE, QT, the debt ceiling, everything going on with interest rate hikes, everything going on with China and Japan being major holders of our bond supply, central bank digital currency being enacted. We have the derivatives market and everything based off the new SOFR rate that just came off the LIBOR rate. So there's a lot. I do want to take a quick moment to establish some credibility about my background so you guys have a better understanding of where I'm getting my information and knowledge from. So let's begin with that. And also remember, because it took me months and a crazy amount of hours to put this together for you guys so you could learn and become more educated about the market in general and the macroeconomic situations that we're in, I'm probably going to be wearing 6 to 10 different sets of clothing. You probably see the camera jump around a bit, but this is all kind of meshed together, cuts and edited in just the best way I could possibly do it. So just bear with me on that end, and let's get into the credibility part. Just to establish credibility, don't let the backwards hat fool you. I've been wearing a suit 7 days a week for the last 11 years of my life. So I like to just chill out and wear some casual clothes when I'm on these videos. But I worked on Wall Street 6 years. I work for a currency broker and a financial technology liquidity aggregator. Now, my clientele was all hedge funds, banks, other brokers, and different types of asset managers in between. Predominantly on the electronic trading side, using different types of electronic trading systems, understanding trade flow, level twos, bid offer spreads, and everything in between. During that time, I managed billions of dollars of trade flow in the FX space. You got to remember that different firms trade very differently. So especially in the FX world where things need to be cleared overnight so aggressively, some banks do $50 billion trades. Other hedge funds might do clips of $100 billion trades, emerging markets, your G10 currencies. And this includes monitoring electronic trading flow, understanding how a trade is executed, whether it's a regular spot trade or an RFQ or a TWAP. Different types of trades, understanding what happens when it goes from the front office down to the middle office, risk management, and clears in the back office at a prime broker through Swift or fixed messaging, and while also doing account management for banks, brokers, other brokers, and hedge funds alike, which I also participated in liquidity management, being an intermediary broker for liquidity in the FX space. So eventually went into the fintech space full time and started selling investment management and risk management software to Wall Street firms. So this is big time software solutions. A lot of these small fintech companies, they like to sell like a very targeted specific solution, like say it's like just front office only, and they'll sell only to sell side banks. Our investment management software company I work for, they're called Adenza, just got bought up by the NASDAQ recently. Their investment management software covers every single asset class, equities, commodities, fixed income, FX, and it's front to back software. So you get the entire conglomerate to manage your entire portfolio, collateral, treasury, back office accounting, front office trading, everything, risk management. Also, the demographic of clientele is both the buy and sell side. So completely encompasses that. This is on the buy side, asset managers, hedge funds, pension funds, insurance firms, portfolio managers, and then on the sell side you have brokers, exchanges, tier 1, tier 2 banks, regional banks, right? All the things you guys have seen with regional banks in the last year. I was at the forefront of that, watching it happen in real time. So on top of that, that is my experience. That is where my wisdom and my knowledge, not all of that comes from those 11 years. I would say probably, 60% of it does though. But the other 40% I have taught myself over the last 3 years. Completely self-taught, not one class taken. Everything I've learned about TA, charting, trading derivatives, the software and solutions that I sold at Adenza, was derivatives based. So across all asset classes. So I wanted to learn how to trade these underlying derivatives and understand the underlying assets better. So I started trading after COVID, like I'm sure a lot of you did, because you had a lot of extra free time and we were home, not commuting to the city every single, day to work. But I taught myself everything. I went out of my way to figure it out. In 3 years, the fact that I have come from never trading an option in my life to now, basically exactly 3 years later, taking $3,000 portfolios and turning them into seven figures is just, I am so incredibly proud of myself to be able to go that far in that fast period of time. That is why I am creating this. I want you guys to understand, just from a macroeconomic standpoint, everything that has happened and everything that is going to happen in the future. Obviously, I'm not going to be 1,000% accurate. There's little things here and there. I mean, my charts go 3 years into the future, but you guys have to understand that, there are pieces to this puzzle that if you don't understand where it started, you're not going to understand where it's going. And I combine all the macroeconomic knowledge with my Wall Street background knowledge, with the fact that I have been doing this aggressive TA and trading over the last 3 years, putting it all together in a package for you guys to better understand where we're going in the future and to better help protect your families and manage your portfolios, because we are in a position where the next few years will change the course of history. And if I could be there to help you guys out, then that's where I want to be. And that's the end of part 1. Part 2, we will be talking about quantitative easing, what happened when COVID began, the act of the Fed expanding their balance sheet, how it affected the bond market, and so on and so forth.